Welcome to S&P's latest European loan market video overview, detailing leveraged finance trends and activity during July 2010. I'm Suchit Gupta, a member of S&P's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in August and early September. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the more than 3,700 contacts in LCD's Leveraged Loan Group on LinkedIn. The links to follow LCD are in the info section on your YouTube channel. Before getting down to business, some fine print. This disclaimer, courtesy parent companies Standard & Poor's and McGraw-Hill, covers all the bases. Please read it at your leisure. What a difference a few weeks makes. Sentiment in the loan and high-yield market was buoyant, both in the primary as well as the secondary. The S&P European Leveraged Loan Index, the LE, had a positive return of 0.43%, its first positive return in nearly 2 months. So far this year, the LE has returned 5.52% positive, almost back to its normalized levels, compared to last year's return of 29.95% for the same time period. The market has picked itself up from a dismal June. Leveraged loan issuance for July bounced back to almost 3 times June's volume, while high-yield volume was almost 2 times over the previous month. The forward calendar for transactions that are announced but yet to be launched rose to an all-time high for the last 18 months. Both loans and high-yield bids were extremely strong in the secondary market. Both recouped their losses that were seen in May and June this year. Improving fundamentals were seen in default rates, both on the principal amount and in issuer count, as they eased again in June. Getting back to the secondary loan market, this chart details the average price of LCD's European Flow Name Composite, a measure of the 18 largest, most liquid loans consisting of 10 issuers since 2002. The secondary market bounced back in July, gaining 161 basis points to finish the month off at 94.92, reversing both May and June's losses. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year. The high-yield market rebounded as well, reversing its declines in May and June. Bids gained 385 basis points in July to close the month at 95.67. Looking ahead, players hope that better sentiment and reopening of the capital markets, including the equity markets, will have a knock-on effect, raising the levels in the secondary markets. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. The main point here, the European loan market posted a gain of 0.43% for the month of July 2010. Almost a whole percentage gain from its loss of 0.42% in June. This brings the year-to-date return to 5.52% positive. Now from the secondary, we turn to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. Both the loan and high-yield markets moved into higher gear in July, with high-yield issuance at $5 billion and loan issuance running close behind at $4.5 billion. These numbers are actually for deals that were launched to the market and do not include a few chunky mandates on the loan side. Forward calendar for loans, i.e. deals that are announced but not launched, touched $6 billion at the end of July. This supply of new loans is a further sign of renewed confidence in the market, and it will offer investors new opportunities rather than existing ones in the secondary market. Default rates continue their southwards migration. The default rate by principal amount decreased to 6.2% at the end of June from 6.5% in May, while the default rate by issuer count decreased to 8.9% at the end of June from 9.8% at the end of May. In summary, the market is strong, with strong primary issuance calendar building up as well as bids holding well in the secondary. One of the trends to emerge over the last few weeks is an increase in sponsor-to-sponsor transactions as private equity sponsors try to realize some gains from existing portfolio companies. Examples of this include Mark Orion, Picard, Autobar. Private equity sponsors are also using the high-yield market a lot more frequently, not only for existing portfolio companies, but also for brand new LBOs, something that wasn't prevalent in Europe previously, given their preference for mezzanine debt. And we see further continuation of bond for loan takeouts, amend to extend, as well as IPOs, as companies address their maturity concerns. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups for July and August. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.